So today our topic will be cash flow from financing activity. Now financing activities of an enterprise are those activities which result in change in the size and composition of owner's capital and borrowings of the enterprise. So whatever funds you are arranging for your business in any manner, that is called financing activity. So for that reason, shareholder fund means equity share capital, preference share capital, and if you are collecting any premium on these shares, or if you are giving any premium on the redemption of preference shares, these all will be part of your financing activity. Similarly, non-current liabilities, like if you are issuing debentures or bonds, or you are making repayment of debentures or bonds, you are paying any interest on borrowed funds you are borrowing from any bank or from any company in any manner, that is also a part of financing activity. Public deposits, term loans, mortgage loan, these all. Similarly, if you are issuing shares, you will be paying the dividend, you will be redeeming the preference share capital, you may do buyback of equity shares. So lot of things are there. So these all are, so whatever you are doing for these two sections, shareholder fund and non-current liabilities, it is owner's fund and it is borrowed funds. This will be part of your financing activity. Similarly, non-current assets are part of your investing activity, and current assets are part of your operating activity. Current liabilities also are part of operating activity. So the whole balance sheet will be used in the different activities. You should be knowing which section will be helpful in which type of activity. So in further future, you will be getting full balance sheet, and you have to use these all information. So that's why I've given you this diagram, that how to identify which activity will be located where. Now, how to calculate cash flow from financing activities? So again, there will be two parts. One will be inflow and one will be outflow. So inflow will be what? If you are issuing shares, obviously you will be getting money, or you will be getting some asset. So obviously that will result a change in your cash and cash equivalents. If you are issuing any debentures and either you are collecting any premium on these two shares or debentures, then this will also result in inflow. Loans received. So if you are receiving any loan amount, then that loan amount will also be an inflow for you. And the loan can be also short term. If you are taking any bank overdraft or you are taking any cash credit, that will also be part of your financing activity. However, bank overdraft and cash credit generally appears in the current liability section, but this is an exception to that rule. So out of these current liabilities, bank overdraft and cash credit will be a part of your financing activity. Then what are the outflows of financing activities? So if you are redeeming preference shares or you are redeeming the debentures, you will be paying the cash, or you are buying, you are purchasing your equity shares on your own, then you are paying any of the loans you have taken. You are returning the amount of bank overdraft or cash credit or any term loan, mortgage loan, public deposit. These all will be covered in financing activity. You might be paying the interim dividend, you might have paid the final dividend, or you are paying interest on any loans or debentures, that will also be a part of financing activity. So these all are outflows of financing activities. So maybe your inflows are more than financing activity, or maybe your outflows are more than your inflows. So if inflows are more than your outflows, then it will be termed as cash flow from financing activity. And if your outflows are more than your inflows, then it will be termed as cash used in financing activity. This is the last section of this cash flow statement, major section. So if you have practiced these all three separately, only then you will be able to attempt the full question. Otherwise, you may be getting confused. So please first do these three sections separately, only then you will be able to complete the full question. Okay, from the following information, determine cash flow from financing activities. Equity share capital is 5 lakh in the current year, and in the last year it was 4 lakh. So it is opening balance, it is closing balance. 10% debentures, 1,50,000, 1 lakh. Securities premium reserve, 40,000, 50,000. So this way you have to see what is the opening balance and what is the closing balance. We can prepare accounts also for each and every one, but we can think logically also. So just see. So equity share capital was last year 4 lakh rupees, and now it is 5 lakh rupees. So how it can increase? It can increase only by the issue of equity shares. So we will write it cash proceeds, or we can simply write proceeds also. Proceeds from issue of equity shares, 1 lakh rupees. Then 10% debentures. 10% debentures, last year balance was 1,50,000, now it is 1 lakh. So it is reducing. How it will reduce? It will reduce only in the situation that you are redeeming the amount of debentures. So we will write it here, redemption of 10% debentures. How much we have redeemed? We have redeemed 50,000. If you will make the account, you will also understand that securities premium reserve. Now securities premium reserve is always collected on issue of shares or debentures. It was 40,000 last year balance, now 50,000 it is. So it is also increasing. So now we have to find out what we have issued, whether we have issued shares or we have issued the debentures. So in this question, we have issued the shares for rupees 1 lakh. So on that 1 lakh rupees shares, that means we have collected 10,000 premium also. So we can add that premium here itself, including premium. And that premium is 10,000. So the total amount will become 1,10,000. Now bank overdraft. Bank overdraft last year balance was 1,50,000. Now it is 2 lakh. So that means you have taken 50,000 more from bank. So increase in bank overdraft it is 50,000. Then interest on bank overdraft. Now interest on bank overdraft is not an asset or liability. Just opening and closing balances has been given that last year you have paid 10,000 as interest and now you have paid 15,000 as interest in this year. This is a nominal account. Remember the nature of the account also. So we will not take the difference between the two because their balances is not carried forward in the balance sheet. So this year you have paid 15,000 as interest. That means you have paid 15,000 as interest. So 15,000 is your outflow. So interest paid on bank overdraft $15,000, and because these are outflows, so that's why these amounts will be written in the brackets. All the outflows should be always written in the brackets. This one and this one also. Then next point is, okay, so these all points are finished now. Now see the additional information. Interest paid on debentures rupees 10,000. So we have paid the interest on debentures it will be 10,000. So these three are outflows. We are paying interest on overdraft. We are paying interest on debentures. We are redeeming the debentures. So now, okay, so all the informations are used now. We can calculate the cash flow from financing activity. Now first we have to check the total. So the total of inflow is 1,60,000 and total of outflow is 75,000. So inflow is more than outflow. So we can say it cash flow from financing activity. Now 160 and minus 60, 1 lakh minus 15, 85,000. So answer will be 85,000. So net we have received 85,000 from financing activity. Some are inflows, some are outflows, but the net effect of that is that finally we have received 85,000 from financing activity. I hope this point is clear. Very important point which I want to tell you here, that till now you have not got an adjustment regarding the interest. Question is itself making you clear that how much interest you are paying on debentures. Suppose this point is not there in the question. Even then you are supposed to make adjustment of debentures here. Then how you will do at that time? So 10% debentures, what does it mean? You already know its meaning. That these debentures carry interest rate at the rate of 10% per annum. Now we have two amounts, 1,50,000 and 1 lakh. So 10% of what? This is the question which will be in your mind. 10% of what amount I should calculate as interest? It may be 1,50,000 also, it may be 1 lakh also, depending upon your assumption. Now suppose here question says in additional information that debentures had been redeemed. Debentures are redeemed on, focus on the dates now, 1st April 2019. Generally question will one question is there that if we have issued shares and debentures both, then on what we will assume the premium. In that situation, most probably question will make you either clear about that where you are receiving the premium, or question will give you only one issue of either shares or debentures. Now suppose this is the redemption date. So now you will calculate interest on 1,50,000 or 1 lakh. Question is saying that you have redeemed 50,000 rupees debentures on 1st April 2019. Then in that situation, what has been done? You have returned 50,000 in the beginning of the year. So for full year, what amount you have used? Full year, we have used only 1 lakh rupees of debenture. So that's why we will calculate 10% of 1 lakh in this situation. I hope this point is clear. Then second situation may be what? Second situation may be that debentures are redeemed on 31st March 2020. Then for full year, what amount I have used? That you have to find out. So for full year, I have used 1,50,000. On the last day of the year, I have redeemed 50,000. So in that case, I will calculate 10% of 1,50,000. This is also clear. Now, if question is giving you this information, then you will decide accordingly. But if suppose question is also silent on this date of redemption, then you can assume any date out of these two, but you have to mention these dates into your working notes that we have 31st March not clear. Okay, I will be explaining. So you have to mention these dates as you have assumed that on the basis of this assumption, I am calculating interest on this amount. See, on 1st April 2019, if you are redeeming 50,000, so you are redeeming on the beginning. Out of 1,50,000, you have returned 50,000 on the very first day of the year. So your debenture balance will be what? It will be 1 lakh for the full year. So obviously then you are calculating interest on 1 lakh. But if you are redeeming 50,000 here on the last day of the year, oh, sorry. I have just a minute. My amount is a little bit wrong because okay, this amount is of bank overdraft. Debenture amount you see 1,50,000. Yes, 1 lakh. Now on the last day of the debentures, I am redeeming 50,000. On the last day of the year, I am redeeming 50,000. So my final balance will be 1 lakh on the last day, not for the full year. So what amount I have used for the full year? I have used for full year 1,50,000. I have used for one full year 1,50,000 of debentures. That's why I will pay interest on 1,50,000 now. I hope this point is clear now. Now third situation may also be there. Debentures are redeemed on 30th September 2019. Now you are redeeming debentures in between. So for 6 months, you have used 1,50,000. Then for 6 months, you have used 1 lakh. So accordingly, you will be calculating the interest. So means any date can be given in the question. However, generally you will get these due dates only, but it can be any date in case of loans. So you have to find out ultimately what amount has been used for how much time. And you have to calculate interest accordingly. As you are calculating interest on capital in partnership, so same is the way to calculate interest on loan here. Now I hope concept of calculation of interest has been discussed in detail and you are clear about that concept. Should I proceed? Now same may be the case with investments also. Same may be the case with investments also. If some percentage is given with investments, 9% or 10%, whatever it is given, same principle will be applied here. First, find out whether any date has been given for sale of the investments or for purchase of the investments, what date has been given. Otherwise, you can assume out of these two, any date you can assume, and you will calculate interest on investments in the same manner as I have told you for the debentures. So 1% can be with any loan or debentures or bonds. 1% can be with investments, and investments are generally used in investing activity. So there also, if you will see the previous questions, percentage was given, but even then the question is clearly giving you, because question has told what amount of interest has been paid on debentures. That's why we will not use these rules. In this question, this was clearly mentioned that what amount of interest has been paid on debentures. In that case, we will not assume anything. We will just pick the interest, whatever question has given, that we will put in the solution. Same is the case with investments. Third case may be for the preference shares. Preference shares also carry some percentage with their name. So rule is same as regarding 1st April or 31st March. If some redemption has been done or if some issue of shares has been done in the question, you have to check accordingly. But one difference is there, that dividend is paid on preference shares. Interest is not paid on preference shares. Dividend is paid on preference shares. So suppose it is 10% preference shares, obviously we will calculate the 10% of the either balance, maybe the opening balance or maybe the closing balance. But dividend is not paid according to the time factor. That you have to keep in mind. Dividend is not paid according to the time factor. So if some redemption has been done in between of the year, in mid of the year, even then you will be paying the dividend on the closing balance only. There you cannot apply that concept that we have used for 6 months the amount. So dividend will not be paid to them. The dividend preference share should be existing on the last date of the financial year. Only that preference share will get the dividend. That is the rule here to be applied. So I have cleared this concept. You might be facing this concept in some of the questions. That's why I have discussed in detail. Rest we will do in next class.